Hello everyone and a warm welcome to this week's stock markets update for Monday, April the 6th, 2026. After a one-year hiatus, we are back to forecasting the financial markets. As you remember, we primarily use the Elliott wave, where we view the markets as moving higher in 5 waves up and moving lower in 3 waves down. And we believe the market just put in a larger A wave, is now in a B wave, and will be followed by a C wave. Why do you think that? Because one is only as good as one's last call. Now, this is a call all the way back from April the 3rd last year, and we forecasted that the S&P 500 would drop to around 5110, rally to about 6740, 7120. Why these accurate numbers? Because they are based on Fibonacci ratios, and the universe must adhere to these ratios, including the stock market. And then the index would fall back to about 5500, 6120. Of course, we can't narrow it down exactly a year ahead of time, but this is pretty good. Remember that the index hit a low on April the 8th, 5 days after we forecasted this, at 49.10. So we were only off by 200 points, which is, I think, 2.5 off, which is, of course, a fantastic accuracy. And then it rallied to over 7,000 by the end of January this year. And it reached a low last week at around 6,316. So far, the market has done exactly as we forecasted. Well, can we see your forecast from last year? Yes, here it is, as you can see. April the 3rd, 2025, published on investing.com, one of the world's leading market websites out there. So you can follow us there. Please do so, because this is what we forecasted again on April the 3rd, when the market was trading at around 54.25, that it would drop to 51.13. We got 49.10. That is pretty darn accurate. Why 51.10? Because that is the 61.8% retrace. And instead, we got a little bit of a overshoot, and then we would see a rally to the next Fibonacci targets, 123.6, 138.2. Why those extensions? Because we believe the market is in a much larger ending diagonal that started March 2020 after the COVID crash. It would then have to drop to about 5,500, 6,100, and then rally to 8,000, almost 9,000. So we're currently just wrapping up the Black Wave 4, and we wrapped up this Black Wave 3, still a Black Wave 5 to go. We must see 5 waves up from that March 2020 COVID-19 crash. We're not there yet. Of this, we are entirely certain, 99.99% certain this will happen. So this is then the current chart, all right? April 6, 2026, we got the 5-wave rally into the target zone. Admittedly, we really would have liked to see 7120. And as you can see, the index has really stalled out in this target zone. And in February and early March, it kept on staying above 6,780. As long as it did it, it had a chance to go to 7120. It did not. In early March, it broke below 6,780, which told us that the larger Black Wave 4 was underway. As you can see here, still to 5,500, about 6,140. And that we're now in a bounce. As I showed you in the first slide, that a corrective pattern, in this case wave 4, tends to break into 3 pieces, an A wave, a B wave, and a C wave. Well, this is then the current market zoomed in. The A wave bottomed last week. The B wave is underway to about 6,900 plus or minus 100, and then we get the C wave. We expect a turn around April 18, April 28, based on seasonality and other market timing tools, and then a decline into September of this year, which is quite common during midterm election years. So the summary of this webcast is that the bull continues, but the markets are now in a larger correction. The bull meaning we're going to see 8,000, almost 9,000 before all is said and done, and that currently a much larger buying opportunity is available for those that can hold their breath a little bit longer, and for those who really view that low markets are great dollar cost averaging opportunities and great opportunities to buy more for less. So take care, trade safe, and we'll see you all next week.